What is going on, traders? Welcome back to a brand new video. Celestin Capital here. And in this video, I want to talk about the one ICT concept that got me funded with FTMO. Now, in the previous video, you guys saw me get paid out about 2.2K from FTMO. It's all verified. I have a track record. I showed you guys phase one. I showed you guys phase two. And then I showed you guys the payout. Of course, I proved that it hit my checking account. I showed the screenshot and everything. So it's all verified. Now, I want to show you guys how I went from getting funded and getting a payout to where we are now. We're on track to potentially get a bigger payout. All right. That video is soon to come if TP gets hit. So in this video, I want to talk about the concept of liquidity. All right. Understand that where there's liquidity, there's money to be made. And also understand that liquidity is what moves the markets. All right. The market needs money to move. The market needs people to be stopped out in order for it to move. Now, don't think that I'm a smart money trader. I don't want you guys to think that I'm some kind of smart money trader. I trade a mix of both, but I wouldn't consider myself a smart money trader. I don't want to get into that cult or that, people thinking that smart money traders are better, or I'm not like that. All right. I just trade to make money, to become the greatest version of myself, to make the most amount of money I've ever made. I trade to be free. All right. So don't think that I'm here to knock retail trade. At the end of the day, we're all retail traders. So get that out of your head. That's not what I'm saying in this video. But there is one technique that I learned from ICT that really helped me out, and that has elevated my game in trading. The concept of liquidity. Now, let's take a look here. Let's say the market is, and I'm going to show you guys in a live market in a second. I just want to give you guys an example first before I do that. As you know, of course, the market does not move in the wrong direction, but the market tends to create nice structure from time to time. And not always, but from time to time, the market tends to create nice structure. Now, understand that the overall picture in a bullish market looks something like this. But there are points in the market on lower time frames, you can say, where the market looks something like this, right? Again, the overall picture is bullish, but the smaller time frames could look something like this. All right. You guys get the picture. I don't want to waste time doing all this. All right. But the overall picture is bullish. Now, because of fractality, you know that the lower time frames in the market may look something like this. And you can see that the lower time frames that, there are shifts of structure. There are shifts of structure. All right. At one point, price is going up, and then structure gets broken, and then structure gets broken again, so on and so forth. This is liquidity. This is the banks stopping people out. This is the banks taking out buyers in order to continue buying, right? If that makes sense. This is the bank trying to get some money in order to move the markets even further. So the overall objective of the banks is to move the market higher. But in order to move the market higher, they need to push the market lower, if that makes sense. All right. I don't want to get too theoretical about it, but I want you guys to understand the concept of it. Now, you'll see a lot of traders tend to place their stops below some kind of low. For buys, of course. For sales, it's going to be above some kind of high. But you'll see traders place their stops below some kind of low, let's say right here. All right. In expectation that the market is going to hold that low. Now, what happens is market makers will purposely push the market down to wipe out those traders. All right. The market will purposely, again, as I said, the market moves based off of money. They need money in order to move the market. So they're going to stop these traders out, take their money, and push the market in that exact direction. And I know this has happened to you before where the market stopped you out just to continue in your direction. Those are honestly the worst trades. I'd rather the market just completely shift structure, shift the direction, and go to the downside than for me to predict the move, all right, but for the market to stop me out and continue in the direction that I originally anticipated. So those are one of the worst trades for me, but it happens, all right? It happens to us all. You cannot say it hasn't happened to you. If you do say that, you're lying. It happens to us all. It still happens to me, all right? But for the most part, understand liquidity, that the market will take out lows on the lower time frame in order to accomplish the longer term objectives, all right? So let's take a look at this on a higher time frame, in the live markets. As you can see here, this is a beautiful example of exactly what I'm talking about. The market got to a level, all right? The market got to a monthly level, and you can see the market pushed above some kind of previous high. What is this? This is liquidity, all right? you can see a lot of people, all right, market got to a level of resistance, and a lot of sellers are now in this market. What do the sellers do? They use this high as their stop loss. And what happens? The market liquidates them. The market makers liquidate them only to continue in the direction that they anticipated. Now, the direction was not wrong. They were looking for sales and they got sales, but it's all about how you position yourself in the markets. That's why you need to be very aware of liquidity. All right. This is what I'm talking about when it comes to liquidity. When the market takes out a previous high or when the market takes out a previous low, and then it starts to break down, you can see price throw this nice bearish engulfing pattern, and you can see price continue in that direction. But you have to allow liquidity to be taken out first before you start looking for your trades. All right, that's the most important part. Allow liquidity to be taken out before you start looking for your trades. Here, you would have gotten some kind of profit, right? And then market took you out only to continue your direction. All right, so that is the concept of liquidity. I don't want to get too deep into it. All right, if you're interested, I have a course. You can email me at celestincapital@gmail.com. Again, celestincapital@gmail.com. And I'll get back to you. In that course, we go in depth. We talk about liquidity. We talk about institutional levels. We talk about all of the above, all right, to make you a profitable trader. Again, I have a proven track record. It's on my YouTube channel. I was a failure. I was a failing trader. And now, things are looking good right now. Got my payout. I'm still funded with FTMO, and we are looking good so far on the account. So I will see you guys in the next video. Hopefully this small concept, all right, I didn't go too deep into it. Hopefully this small concept open your eyes at least a little bit. If your eyes can open at least a little bit, then, I've done my job. All right. So if you need to, go ahead, go back and watch this video, and make sure you're taking notes, because I'm going to keep dropping gems on the YouTube channel. And I just want to make sure you guys are taking notes. You guys are learning something from it. So I'll see you guys in the next video. Peace out.